Thank you, Mr Robertson. It is a pleasure to speak in this debate under your chairship. May I also thank the Honourable Member for West Dunbartonshire for his securing of this debate and his very powerful opening speech on the issues that mortgage prisoners are facing. I also want to thank my constituent, Mr Masood, who is a mortgage prisoner and who 5 years ago brought this issue to my attention and led to the founding of the all-party parliamentary group on mortgage prisoners. He is one example, I know, similar to other members' constituents, and as will be reflected in the lives of many on the mortgage prisoners' Facebook group, somebody whose family has been paying the price for the situation facing mortgage prisoners, with huge sacrifices made for their own family income, their own health, and huge sacrifices just to try and stay in their home, a battle that seems to get harder and harder and harder. And I also want to just make this point, that is, we are talking about mortgage prisoners in this debate today, but this is now in the context of a much wider challenge facing mortgage holders across the country as a result of the challenges in the economy, but also, I would argue, and I want to make this point, the mismanagement of our economy over many years, up to I would say 13 years of failure, cumulative failure and reduced resilience, but certainly compounded by the mini-budget last September, which has seen the cost of borrowing rocket for government, for local government, and for our households. And my constituents, on average, will be looking at a £4,000 plus increase in their mortgage payments this year. But let me come back to this debate today, specifically on mortgage prisoners. I do want to thank the Minister, because he was in a meeting relatively recently with me and others from the Mortgage Prisoners Facebook group and colleagues from the all-party parliamentary group. And that was important. We were discussing the LSE report, which I will make reference to. And he has, the ministers have also written to me on that point. But I will just raise my concerns about the gaps in the letter that I received on the 13th of June. But this debate is important, and about mortgage prisoners who have been described, Mr Robertson, by Martin Lewis as the forgotten victims of the financial crash. I am the co-chair of the all-party parliamentary group, and the APPG has heard from many mortgage prisoners about the sheer desperation of their situation and the harm being caused to them by high interest rates and the government's ongoing policy failures. I am concerned that it is government and FCA policy that is now directly contributing to continuing ongoing harm to mortgage prisoners. When the government sold the Northern Rock and Bradford and Bingley mortgages, it could have sold them to active lenders, which would have offered mortgage prisoners new deals. UK Asset Resolution, however, told Lord McFall, who's the former Labour chair of the Treasury Select Committee, that selling these loans would result in customers being offered new deals, extra lending and fixed rates. Whether or not it was in writing, and I believe it should have been in writing, this was the understanding when mortgages were sold on to Cerberus and others. But this requirement, as it was not written into the contract when the loans were sold, has seen Vulture Fund, Cerberus, who bought the loans, refuse to offer customers new deals, extra lending and fixed rates. So it has been the government that has sold mortgage prisoners mortgages to vulture funds and inactive lenders who have exploited them with high interest rates. FCA rules meant that for years mortgage prisoners were told that they couldn't afford to pay less. That wasn't true. And despite having regulatory oversight for many of these firms, the FCA has refused to intervene to ensure that mortgage prisoners are treated fairly. The FCA allows banks to exploit mortgage prisoners by holding them in separately authorised subsidiaries and keeping them on higher rates. The cooperative banking group exploits mortgage prisoners in its subsidiary called Mortgage Agency Services No. 5 Limited. Barclays holds mortgage prisoners in its Kensington Mortgages subsidiary and is pushing for repossession of mortgage prisoners like Gregston Clark, a delivery driver from South London. Both the Barclays CEO and the FCO know all about this case, but nothing is being done to help. Secondly, it is clear that the FCA and government interventions to date have not worked. And I make reference to that because the modified affordability assessment is spoken about to me in the letter from the Minister on the 13th of June. When the government rejected amendments which would have provided help for mortgage prisoners in April 2021 and which had been supported by the other place, it commissioned the FCA to review the data and the impact of reforms by the FCA to remove barriers by switching to introducing a new voluntary modified affordability assessment test which lenders could apply. The APPG set up a solutions working group to try and make this new modified affordability assessment test work as well as possible, but it simply was not attracting the support needed from the market. And we worked to try and make sure that there was an effective communication strategy and challenged the FCA on how they were taking this forward. The FCA's review confirmed that interventions so far have had only a tiny impact. Only 2,200 of the almost 200,000 mortgage prisoners have been able to switch. Lenders only had a limited appetite to offer options to switch using the modified affordability test, and only 200 borrowers had been directly helped to switch as a result of the changes. The FCA continue to claim that many mortgage prisoners should be able to switch, but haven't done nearly enough to understand why so many are still stuck. The turmoil in the mortgage market around the mini-budget has made things worse and removed some of the escape routes which otherwise could have still been available. And thirdly, immediate action is vital, as the situation for mortgage prisoners is getting worse every day. The APPG has highlighted over several years that there has been no way for mortgage prisoners to gain any certainty over their mortgage payments. The firms which owned and administered the mortgages, which are inactive lenders, have refused to offer the mortgage prisoners fixed rates. We have now had 13 consecutive increases in the Bank of England base rate since December 2021. The SVR for Northern Rock originally was around 2% above the base rate. Now SVRs charged to mortgage prisoners are 4% and above the base rate. The standard variable rate charged by landmark mortgages is currently 8.64%, and it will be going up to closer to 9% following the interest rate rise last week. There are other mortgage prisoners who are paying rates of 10% or 12%. This is utterly unacceptable and utterly crippling. Lenders are taking advantage of these trapped customers, but the FCA and the government don't seem to be willing to make an impact on this area of those who are being hit harder than other mortgage holders because of the peculiar and particular circumstances in which they are trapped as mortgage prisoners. Now, Rachel Neal and volunteers, Jill and others who I pay tribute to at the UK Mortgage Prisoners Facebook group witness the harm being done to mortgage prisoners every day. Mortgage prisoners who families suffering and unable to heat their homes. Mortgage prisoners with cancer enduring very miserable final years. They witnessed the sheer desperation, they themselves also being mortgage prisoners, themselves also suffering ill health, themselves also worried about how they're going to make payments on their homes. They are now in the front line, and they are expected to support these mortgage prisoners themselves without any support to do so, all in their own time, all as volunteers. They witnessed this desperation of people facing repossession due to years of being exploited by inactive lenders, those who have committed suicide and those who are now talking about committing suicide. And what is particularly worrying about the mortgage prisoner problem is that there is nothing to stop it getting worse. And I pay tribute to them who are actually sitting in the gallery today. Thank you for being here. Anyone can find their mortgages sold on as well, Mr. Robertson, without their consent to an inactive lender, which could trap them on an SVR. The APPG has put forward proposals to cap standard variable rates and at inactive lenders and require inactive lenders to offer mortgage prisoners fixed rates. This would be a targeted intervention, not affecting the wider active market, but a targeted intervention on this particular set of mortgage prisoners because of the circumstances they face and the way in which they find themselves in this situation. And at the same time, Martin Lewis has also supported research and funded research by the LSE, who launched their report on the 31st of March at an event hosted by the All-Party Parliamentary Group. At the launch in March of the LSE report, Martin Lewis said, "People have been left in financial, physical and mental misery, exacerbated by the pandemic and the cost of living crisis, ripping through their already dire situations. When we put solutions to the Treasury in the past, it said it wanted to look at them, but they couldn't as they weren't costed. Now, having fought tooth and nail to get some of the data needed from official institutions, it is costed. The government has a moral and financial responsibility to mitigate some of the damage done." Now, almost 4 months later, the government is yet to provide a response to the recommendations in the LSE report. Every month of delay causes more harm to mortgage prisoners. And I want to just mention the Chancellor's Mortgage Summit and the new Mortgage Chancellor. I want to just mention the Chancellor's Mortgage Summit and the new Mortgage Charter, which was announced after it. It is important to note that lenders like Landmark, Heliodor and Engage Credit were not invited to the summit and have not signed up, unless the Minister wants to correct me on this, they have not signed up to the proposals which were discussed. We wrote to the Minister about this and asking that they were invited to a meeting with the Chancellor. Now, this new charter is voluntary and there is still significant discretion for lenders. It is a far cry from the help now for all mortgage holders that was outlined by my right honourable friend, the Shadow Chancellor, last week. Now, as the APPG has pointed out, there remain large loopholes in the FCA guidance, whilst it includes a lot of action which lenders may take, like extending terms, switching rates and switching to interest only, doesn't actually require any help to be offered. Lenders like Landmark can continue to trap people on high standard variable rates and offer no help. There was nothing for those coming to the end of their interest-only mortgage term and facing repossession. So in summary, on mortgage prisoners, the FCA interventions which continue to be referred to by the government in their correspondence and in their debates haven't worked to reduce the detriment being caused, and the Chancellor's Mortgage Summit provided no help for mortgage prisoners facing soaring SVRs. Mortgage prisoners are suffering hugely. It is an injustice, it is a scandal, and it is getting worse for them every month. We need urgent action for them to be treated fairly and offered fixed rates. We need the government to respond to the LSE report and take this responsibility, and to work to deliver solutions which ensure fair treatment for all mortgage prisoners. Thank you.